Hey, what's going on, guys? I hope you're all doing well. Welcome back to a new video. Now, pretty much in this one, what I'm going to do is just, do a case study or trade recap on your dollar. I've done a trade recap on your dollar before. For those of you that are wondering, this is pretty much all of the trades are slightly different, as they all have a slightly different approach and time, obviously. And yeah, obviously I trade two different ways as well. So I've got this SFX method where it's mainly based on learning session, quote unquote Asian session into learning manipulation. And that's based on manipulation points of what, previously happened in the Asian session, stuff like that. And that's the SFX method. And then the second one is obviously basic smart money concepts, where order blocks, quote unquote supply and demand zones, and then obviously liquidity and inducement, right? So yeah, there's obviously that way. And I thought, why not share it to the YouTube? I've done a video in over a month now, so it's definitely time for an upload. So yeah, any questions, make sure you let me know on Instagram or Telegram, whatever. Also, I'd like to mention as well, if there's any sort of things that you want me to that you want to be seen to be uploaded to the YouTube channel, if you want me to explain something, then please let me know, as I'm more than happy to help. And I love doing videos, so any suggestions are better. I do believe I need to finish off the beginner course as well, which I do plan on doing eventually. So as you can see here on a weekly time frame, overall price is moving to the downside, and obviously as you can see here, we seem to be tapping into this sort of demand area as well. So that's a sort of sign that, okay, we've just seen this huge sell-off, and obviously once we see a huge sell-off, we should see a pullback, because obviously impulse correction, right, and so on and so on, until eventually the trend ends, right? Because the trend is your friend until it ends, let's just say. But this is a counter trend trade, don't get me wrong, slightly riskier play than what we should be doing usually. Obviously market structure is extremely important, that we should be trading with the structure, but I thought, why not take that risk? I was happy and I felt comfortable taking that counter trend trade. As you can see here in the weekly candles as well, you can see this huge sort of rejection to the downside, and then obviously once you get to these two candles, it's sort of seen like a doji, which obviously indicates indecision, right? But obviously once you see these wicks to the downside, that indicates obviously that sort of rejection. So it's like saying, okay, price is saying to me, I'm rejecting to the downside, I don't want to go down there, right? That's sort of the way I view it. And then obviously once this sort of bearish candle happened, I was sort of discouraged. I didn't really want to be in the trade, but then I thought, okay, well, there's definitely something within this wick, because obviously wicks can act as hidden supply and demand zones. So I thought, okay, if we get any sort of bullish sort of confirmation on lower time frames, then I'm going to take that risk. It's a counter trend trade, I'm happy with it, so I thought, why not? So once we've gone a 4 hour time frame, before I do actually, I showed it daily. As you can see, we've got this low and got this high, right? We've seen this huge sell-off, and we started to see this huge bullish sort of candle, indicating that the bullish momentum is potentially pushing back. But we closed below, above all the previous sort of bearish candles. So when you compare, in terms of momentum, you've got this huge bullish candle right up to here, right, which is around here all the way to here, right? So obviously in terms of momentum, the bulls are in control at the short term, right? So that indicated that we should see a short term pullback. I'll show you the 4 hourly in a minute. So we've got this low and got this high. This is now our daily trading range. So if you wanted to mark that out, you can, but I just usually remember the price, 120 region and the 1600 region, right? And then obviously from there, price started to range. Obviously we could potentially see something like this happen. So when price forms a range, as we know, when we as liquidity traders, it's just building up liquidity to the upside and the downside. So we should see a manipulation of this happen and a manipulation of this happen eventually as well, right? But usually we see something like this before moving down, and this is something that's very commonly seen. So yeah, I'm pretty bullish at this point. And then when we go on H4 time frame, as you can see, we just letting price play out, do its own thing. As you can see here, we've got this low, which acted as an inducement for this mitigation on this demand zone here, and then the exact same sort of thing here. So this indicated that, okay, price is, we're squeezing here in price. We're squeezing here in price, right? So around here, and then obviously we've seen a manipulation to the downside, a manipulation to the upside, right? And then obviously that low, obviously then acted as an inducement, like I just said a second ago. As you can see here as well, you sort of got these supply zones which are just holding, right? Then obviously you got this supply zone here, so it is holding short term. And then this is the first sort of sign. Obviously this is when you measure premium discount, this is well too deep in price. I wouldn't even sell from here, well here. So I'm still sort of holding this supply zone at this point, and then obviously once that happened, and supplies and obviously price played out over the next sort of few hours. You can see here that price came back down, mitigated this previous demand zone, indicating that the bulls are potentially in control. And then not only did we get a breaker structure above this high, we also got a breaker structure above this high, okay, which would be a trading range, okay. So yeah, nice breaker structure above there. I was hoping that we'd tap into this supply area, you know, obviously the hidden supply demand zone, you know, the wick method. I did a post on Scrum about that as well if you're interested in looking at it. Just scroll down a page. It's hidden supply demand zone, something like that. And then as you can see here, right, this acted as inducement for this high then, but we also closed above it, which acted as a breaker structure. And obviously we closed above all this sort of, you know, smaller time frame highs as well. So I was pretty, you know, bullish at this point. And then from there we have a new trading range, which would be this low and this high. And then obviously that low and that high we can trade within that range, right? We do have a sort of shock sort of entry on this one, if we were taking a trade based off the 4 hourly. And I drew this 4 hour zone just because obviously again it's the wick, so obviously I knew there's something in there, and I thought, you know what, I had the time at the time, so why not scoot to the lower time frames and just see if there's a, you know, a nice demand zone that is hidden somewhere within this wick. And we did see that on the 5 minute time frame, which I'll show you now. It is over here. Right, so as you can see here, we have a 5 minute supply zone, demand zone, sorry, and which price tapped into there. Then obviously from there we did see a nice sort of breaker structure to the upside, indicating obviously that bullish sort of you know, sort of momentum. And you know, don't get me wrong, once you enter based off this demand zone, which I'll explain in a minute, you can sort of look back in price and you can see this high and you can see, you know, this high, and it's up to you what you do at these highs, because obviously at the highs it sort of supply zones there. For me personally, I wouldn't have took partials at this high, just simply because this can act as inducement for this supply zone. So I'll probably look to take partials at this one, right? Because obviously there is no liquidity, you know, in here, right? So yeah, I'll probably look to take this, not take partials at this one, you know. As you can see, you know, price sort of closed back above it. We did sort of get a short-term reaction here, but I didn't want to take this one, partials here, just simply because this can act as inducement, because obviously how popular smart money concepts is nowadays, right? So I was looking to take partials at this one. And then as you can see, you know, this demand zone as well, before I go up there, I'll show you this. So as you can see from this demand zone as well, we did go, I will show you the 1 minute time frame, but there's things that we, you know, sort of look for. And it's up to you what you do, you know, sort of here. Because usually what I do is I go to the 1 minute time frame and look for my entry. It's a pretty similar story to the 5 minute. But there was liquidity and equal lows hanging around here. So that can act as a sort of inducement for this demand zone here. But obviously, you know, once price even taps into this region, that's when you drop to the lower time frames and obviously look for that sort of, you know, call it confirmation entry. But this was a confirmation entry prior to that, you know, previously 4 hour demand zone, right? So you can take a risk entry based on here and have your stops above, you know, below here, and entry based on there. Or if you're more of a confirmation guy, or you look at the candles, especially if you look at the candles, you just look for any sort of bullish confirmation. And obviously once price, you know, made this bullish engulf, and what you can do from there is have your stops below here and play it really aggressive. It just depends on how your, you know, your risk tolerance and how sort of your approach is. So enter based off the bullish candle, or there's 3 ways. Another way is enter off the 50%. So you probably would have been mitigated here. And then the next one is based on, you know, the breaker structure of the candle, the previous candle. So it's up to you how you enter based on those candle confirmations. Or what I, you know, personally would have done is probably went to the 1 minute time frame and look for the entry there. But yeah, it was, you know, a beautiful trade. Even based on a risk entry, confirmation entry is a very beautiful trade. And if I go back to the 4 hour time frame, I'll show you why I targeted there. Because I'm sure a lot of you are thinking, well, why did you close this trade straight out there? Why not anywhere, you know, wherever, right? And the truth is, well, there's no truth really. It's just obviously this is our, you know, higher time frame trading range, right? We are overall bearish, so we don't want to be in counter trend trades for long term, right? Because that's when you're on the wrong side of the market then. Because a lot of people, they'll get the entries fine, they'll, you know, get their stops fine, but because they don't know where to close the trade in terms of take profits, they eventually, that trade that was, you know, potentially running 10% is now turned into, you know, a 2% trade, because you didn't know where to move your stops, you didn't know where to close out the trade. So this is a simple thing that you can do if you are counter trend trading. So what I like to do is get the trading range and then simply draw the fib tool. I turn the, you know, opacity down for these 100 and 0. I just left the 50% on because that's obviously what I focus on. So below here is our discounted zone, and above here is our supply zone, premium zone, sorry. But the reason why I targeted this midpoint was simply because that is the midpoint of that trading range. So where both buyers and sellers need to meet, that's obviously the equilibrium. When you look at it, when you look at supply and demand and economics, it'll come up with a chart that I don't know. No, I haven't done a video on it before. If you'd like me to do a video on it, let me know. But just look up the supply and demand and economic. I'll probably try and put a picture on the screen as well. But as you can see, where that sort of curve is, and when price comes back and meets each other in the middle, that would be your equilibrium, right? So that's the midpoint of the trading range. Okay, so that's why I like look to close there, because like I said, as soon as we hit that 50%, that's when we're heading into the premium zone, and that's when we want to be looking for sellers, if anything. So that's where I wanted to close the trade. And again, you can look at this as sort of one big bearish candle, and you can see the wick lined up with it anyway. So there was that extra confirmation as well to that midpoint, right? But yeah, it's a simple 5 minute refined from the there's a 4 hour wick, right? It's exactly the same on a 1 hour, the 15 minute as well, and then eventually on the 5 minute we've seen a perfect demand zone on which price tapped into. And you can wait for price to tap into this 4 hour zone, then look for your confirmation entry on the 5 minute, and obviously it wouldn't have been down until it wouldn't have been until around here anyway, right? But obviously, if you want an extra confirmation, because it's a probability game, so the more you want to try and stack the odds, if anything, right? The more you have in your favor, the better the trade's going to play out, or the higher probability is going to be, because it is a probability game, right? This is why when you add that probability in terms of, okay, counter trend trading and pro trend trading, it's like, well, obviously the pro trend trading makes more sense because you're riding with the overall structure of the market. Counter trend trading, less probability, but it's still obviously that high probability on the short term, right? So yeah, this is why I didn't want to be in trade for too long, okay? But yeah, it was a 5 minute entry. You could have taken an entry after 1 minute. So pretty much what people do is, because the order block as well, in which we took the trade from, it was also, there was a slight difference between the 15 minute as well as a couple pips above, in which it tapped into, and on the 15 minute it looked like a break structure confirmation entry as well, and it was the same POI. So when price taps into that 15 minute sort of order block, that's when you want to go down to the 1 minute time frame, right? Even if it taps into the 5 minutes, sometimes you want to look for the 1 minute entry, just because obviously the more confirmation the better, right? Because you're stuck in the odds. But yeah, it was a beautiful trade, really. Hopefully you've understood the logistics, and hopefully you've gained some value in this video. I don't really want to show the risk to reward. I'll probably put it in the title, just to simply, because I don't want to sit here and brag about the risk to reward, because not all trades are going to turn out, like big trades. I'm perfectly fine with taking 2%, 3%, but obviously I'm more of the riding momentum trade, especially when pro trend trading, or I'm targeting these protected highs and lows when I'm counter trend trading, specifically. But I'm all about the momentum, riding the momentum. So that's why sometimes these 3% trades turn into 10%, 15%, 20% trades, even 30 plus, right? I don't sit there and aim for instantly 1 to 100, because that's not being pragmatic about anything, right? That's very unrealistic. So I don't want to sit there and say that I try and hit a 1 to 50s all day, or I hit 150s all day, because I don't, and no one does, in fact, right? All day, every day. Because let's be honest, the people who claim on Instagram who they are funded as well with FTMO, and then they say the next week that they've made a 1 to 20 trade, and you go on the FTMO leaderboard and it's not even anyone above 20%. It's crazy. But yeah, a lot of people lie about it, and honestly, it all is just marketing to try and get members, because that's how they pay their sort of way in life. But it's one of them with me. I don't promote this as so much like I like you see on everyone else's story. I'm just like, if you like how I trade, if you want to learn more, then let me know, and you can just join on with us. But yeah, brilliant trade. I put the percentage in the title anyway. I'm not going to sit here and brag about anything. I'm not one of them people. But other than that, guys, let me know if there's any questions. I'm more than happy to help you guys, and let me know if there's any recommendations for any new future videos that you want me to do. But yeah, it's as simple as A to B trade, as counter trend trade. It just made sense, and it's important to look at the candles. It's important to look at your trading ranges. And yeah, other than that, end the video here, guys, and catch you on the next one. Thank you.